Good evening, traders. So today is February the 22nd. This is the Sunday outlook. I'm going to quickly go over DXY, GBPUSD, and EURUSD. We're going to take into account what we had looked at last week, what price printed, what it's telling us, and what some potential plays or what the narrative could look like for the week ahead. So starting on the US dollar index, essentially what we marked out last week was this swing high to swing low, kind of showing us on the daily that we are continuing bearish. Came into this level of interest around this fair value gap, which also matched with this breaker structure. We reacted out of it quite nicely, however, we have come to already sweep that liquidity. What we could see now is price either come up a little bit further to take further liquidity around Monday, Tuesday, before we get that sell-off. Similarly, we could just initially seek to take the liquidity all the way up to around the 95,500, where we would then need to reevaluate whether or not we're going to continue bullish or if we are simply going to be looking for sales, or if we could consolidate around the area. On the 4-hourly, over the last week, we basically saw price just continue pushing to the upside. We took all of the highs from the previous week as well as the highs from the week before, and we have now begun to at least show some sort of shift in momentum. So we do have a change in the state of delivery on the 4-hour chart, which could be a nice formation of a new order block. We would want to see how price kind of reacts out of here early into the week, whether or not we get that reaction on Monday, or if we see price simply push and we get that reversal or that retracement the day after. Is kind of, we'll wait and see till that happens. But we do have a point of interest now after a liquidity sweep of previous weekly liquidity matching our higher time frame narrative. So this could be the start of the shift that we're kind of expecting. Or we could see from this level with price to come back, then retrace, move away. We could also see price initially seek that previous week liquidity there, either use it as a bounce, to mark this out as our options, or we could see price push away and then just completely disrespect and initially start a more bullish run. So they are 3 options for the dollar in the near term. In terms of our clear draws and liquidity, we are going to be looking at that previous week high, which we understand is also a doji on the daily. We have the POI. And in terms of a bearish target, we have these initial previous week lows as well. Great. So in terms of our actual bias on the US dollar index, we continue to be bullish because we are yet to kind of confirm greater indication of sell side pressure. So until we get that, we are going to remain with a bullish dollar bias, whilst understanding that there is the potential of a shift, at least on the higher time frame, but we are yet to get that confirmation. So moving over to GBPUSD. Last week we identified this POI being the value gap, which also aligned with our discount. However, we did not successfully push away and clear level here. We kind of came straight back into it and disrespected it, and we have closed now below, which either gives us the indication that price could be pushing lower, or we're simply reacting to a POI which is deeper in. So we have this order block, for example, happens to be this kind of indecision candle. It's not the nicest order block in the world, but it is one nonetheless. So you can see price is already starting to stall at this level, not quite closed inside it either. So we are rejecting the level on the daily. If we get to the 4-hourly chart, we are also, as we saw on DXY, on the flip side, we have given the initial indication of price wanting to start moving away. So we have that change in state of delivery on the 4-hourly to the upside, given that initial push that buyers are stepping into the market here. So we could see price initially start to just push away like so. But we could also see price take out that previous week low before wanting to move higher. Similarly, if we are going to just initially be bearish and continue bearish, and price will it will not kind of hesitate to take this level out, and we will ultimately see price just start to push lower. In terms of our draws and liquidity, if we get those marked out, we have our previous week lows. And if we were to go bullish, our targets would be our previous week high up here, as well as the initial higher time frame swing points. So we have our ultimate higher time frame target. Like so. So if we switch to EURUSD now, yeah, it's a similar story. When we're trading highly correlated pairs, they often look relatively similar. We are in discount of price, reacting at a point of interest, being this value gap, which we have failed to close, and we've taken liquidity. So we could, much like DXY, we could see price sweep liquidity before that push, or we could simply see price completely disrespect this level and just start trading lower. When we think about the accumulation, manipulation, distribution model, or power of three, we've had two phases of accumulation now. Our next phase, let's mark this out as accumulation. The next phase would be the manipulation. And if we are going to continue bullish, then we would expect the manipulation to look something like so. Manipulate to the downside, potentially react from this order block. Change this back to blue. Before we get the final distribution, which would ultimately take us towards the higher time frame draws. And it would look something like so. So it would be the sweep followed by the push. That would be the ultimate, the nice thing to see in price, but it's often not the reality. We don't get what we look for most of the time. And that's why it's important to have a model that we can essentially apply to the market and be reactive rather than speculative on the charts. So if we shift down to the 4-hourly time frame on EURUSD, you see that we are still clearly bearish. They're making lows, highs, lows, highs. However, comes to structure, what we need to be aware of is that this pullback is a very high likelihood of being liquidity to fuel a move lower. Why do I say this? When price makes a large push, we would expect price to make a large retracement to at least continue that push lower. However, when price makes a large push and a small pullback, this is where we often see the liquidity to be taken to fuel the move lower. And this is why lots of traders are getting stopped out of these positions. Here's a clear example. Price made a big push, a small retracement, another push, another small retracement, push, failed to break to push any lower, and then price came all the way up, taking out these sellers and all of these participants in here before fueling the move to ultimately make the next larger leg down. So how do we make the most of these kind of opportunities? Well, we can identify POIs within these swings. Change that to blue again. Understanding that price is likely to take out all of these lows. And this is where in your trading you can start to ultimately reduce amount of losers you take, increasing your profitability, but also increasing your win rate, which does one or two things. One, it makes us more money, but two, it also reduces the psychological stress and the burden from taking multiple losses before taking that winner in the correct direction. So going back to EURUSD, we can actually see price start to do if we are going to continue pushing lower, but we do want to see that on the daily chart. If we want to see price moving higher, then we are going to need to see that previous weekly low liquidity taken into this point of interest that we had marked out from last Sunday's analysis, which would ultimately be a really nice level to see price shift from and give some sort of indication of buyers stepping into the market there to continue our daily bias of longs. However, when we look at our intraday, we are going to continue to be bearish, and that is simply to the fact that we are failing to close above lower highs. Obviously, we've taken liquidity here, but the stronger low in this swing was here, and we have failed to close above that again, meaning that price is ultimately going to be drawn to the next low if we're going to continue bearish on the hourly and the 4-hourly. And that ultimately aligns with the previous week low, which is a key of drawn liquidity. So what I would be expecting price to do is to take these lows before giving us some sort of reaction or confirmation to push higher, and not, like on GU, if we see price come in and disrespect this level, we're ultimately going to see price just start to trade lower, and that's fine. We'll continue to look for short opportunities, and again, like I said, we are going to be reactive rather than speculative gamblers when it comes to trading. Just to summarize, then, we are continuing with our intraday bullish bias on the dollar, which gives us our intraday bias of continuing to look short for opportunities until we get that higher time frame confirmation that price is going to send the Forex pairs of EURUSD and GBPUSD higher. So until then, I will be continuing to look for short position as a favorable setup.